Now let us go to the provisions relating to input tax credit. One of the main advantages under the GST regime is supposed to be the greater availability of input tax credit. When we initially discussed GST, we discussed three concepts. One, it's a destination based consumption tax. It's a tax on value addition. That is, only the value addition has to be taxed, which meant that at every stage I would be entitled to various input tax credits. Now let us look at what are the input tax credits to which I am entitled under the GST regime. So just before I go into it, I would look at GST as being an evolution of the tax credit system which has been prevalent in India. We first had the mod VAT credit system in 1986, the SENVAT credit rules in 2002. For the first time, they allowed goods versus services under the SENVAT credit rules in 2004. VAT was introduced in 2005 in various states, though it was introduced later in Tamil Nadu. And now we are moving to a GST regime. Well, all credits will be available. Now let us look at the manner in which credits will be available and how credits are fungible under the GST regime. Now, when I look at input tax credit, today when I look at excise, they say that you will get credit of inputs, input services or capital goods. To understand what an input service or a capital good is, there is a definition under the SENVAT credit rules. Either I'll have to look at rule L, 2L, or I'll have to look at rule 2M. I will have to satisfy that criteria. What they have done in GST is, though they have prescribed criteria, it's a very simple criteria which they have prescribed. Input is anything other than capital good which is used or intended to be used for business. Capital good is anything which is capitalized in my account. So the treatment matches with my accounting treatment. If I show something as a capital good in my account, it is a capital good for the purposes of GST. Input service is any service intended to be used in the furtherance or course of business. Output tax is any tax payable under this act. And input tax is defined as any tax which I reimburse or which has been paid on supplies received by me under GST. They match those details with what the supplier had supplied to me. The supplier should have indicated 100 quantities are supplied to me. This is the tax element on that. If I indicate in my returns that 100 quantities have been received and I have taken credit on this quantity, if both match, only then final credit is available to me. So initially I had spoken about matching of returns. When we had spoken about returns, I had talked about three stages. Outward supply details on the 10th, inward supply details on the 15th, and returns on the 20th. Based on the outward and inward supply details, they will be able to do this matching of credit. So what we are now looking under the GST regime is there is no longer any manual filing of returns which is possible. All returns will be uploaded onto the system. My returns will be available to the government. The supplier's returns will be available to the government. To whom I supply, my recipient, his returns will be available to the government. Everything will be matched by an automated operational system called the GSTN, and only if everything matches will I be eligible to take credit on a final basis. Provisional credit is allowed to me, but final credit is not allowed. In case, let us say there is a situation where I have taken credit on 100, but the supplier shows only 80 as being supplied. Additional 20, no credit is eligible for me. All credit I take have to be reversed or it will be recovered again as tax from me. So it's very essential under the GST regime to maintain appropriate records, ensure that what the supplier files and what I am filing are matching. In the event there is any discrepancy between the supplier's filing and my filing, I will have to remedy the discrepancy under GST law. This will affect the amount of credit I get as well as affect the tax payments which I am required to make under GST law. Now there are some items on which I cannot claim input tax credit. These items are similar to the restrictions which were there under the SENVAT credit rules. Except for these items, I can claim SENVAT credit on all other input services or capital goods received by me. Now let us look at what these items are. Motor vehicles and conveyances, except where they are in turn used for transportation or imparting training of flying or transportation of goods. So what it means is, let us say I am in the trading business. I get a motor vehicle for the use of my management. That is not eligible as credit. In today's regime, it's not eligible as credit under excise. It will not be eligible as credit going forward under the GST regime also. Food, beverages, outdoor catering, beauty treatment, health services, so on and so forth. All these are not eligible as credit. What they're trying to say is that if it's meant for business purposes, for outward supply, you are eligible to credit. If it's meant more for personal consumption or consumption of employees, and it is not correlated to your outward supplies, you're not eligible to credit on these specified categories alone. All other categories you are entitled to credit. Rent a cab, life insurance, health insurance, except where the government notifies it's mandatory to provide the same for your employees, you are not entitled to credit. Goods or services used for personal consumption and not for business purposes, no credit. This is something which will majorly affect a lot of industries. If works contract service is used for construction purposes and it results in immovable property, then no credits available. This is a continuation of what happened under the GST regime. The principle being that immovable property previously was not subject to either excise duty or VAT. Under the current regime also, GST or goods and services tax is a tax on goods and services. It doesn't cover immovable property. Therefore, if the resultant product is immovable property, there is no GST credit which is available, except on works contract resulting in plant and machinery. What is plant and machinery is defined over here. So even if there's some plant and machinery which is affixed or attached to the ground, you will be entitled to credit on that plant and machinery. Any other immovable property, no credit is available. So ITC, you should take it in your monthly returns and show it. For any reason, if you have not taken it, the last date for you to avail of such credit is the time by which you file your annual returns for that particular financial year. It is to be filed by the 31st of December, which is subsequent to the end of that financial year, or the date on which you actually file your annual returns. After that, you will not be able to claim any ITC credit pertaining to that financial year. The second thing is, you will not be able to claim ITC credit on capital goods if you have claimed depreciation on the tax component. So this is something even under the prevailing regime. Let us say the cost of the capital good is 1000, tax component is 200. You cannot claim both depreciation as well as ITC on 200. That's all this says. Therefore, you either claim depreciation or you claim ITC on rupees 200. This is another important provision. The recipient has to pay the supplier of services the value along with tax within 3 months. If it's not paid, credit which you have to take will have to be reversed. As and when you pay, you can retake that credit. So what this basically means is, within 3 months, the value of the supply also has to be paid. Therefore, if you have a credit term of 6 months and you take credit based on that, you will have to reverse your credit after 3 months if you not pay the supplier. So what you'll also need to do is relook at your contracts and see if your credit terms need to be changed depending upon this requirement under GST law. Now, it may happen in many businesses that part will be used for business, part will be used for personal purposes. part will be used for taxable supplies, part will be used for exempted supplies. In that case, the question arises, will I be entitled to 100% of the credit, or will I be entitled to the credit only what is relatable to business purposes or what is relatable to the supply of taxable goods? What the law says is I can take credit only related to the portion of taxable supplies or what is used for business purposes. What is correlatable to exempt supplies or personal supplies, no credit can be taken, and I will have to therefore look at what is my taxable supply, what is used for business purpose, and only to that extent I can take credit. A formula has been prescribed under law, and that formula requires to be followed. Now, I have seen when I can take credit, on what I can take credit. So the availment of credit is completed. There are two concepts when it comes to credit. One is availment, and two is how do I utilize the credit. We had previously referred to as the concept of dual GST, where there's a CGST, there's an SGST, and there's an IGST. So now, after I avail credit, how do I utilize it? What the law says is SGST can be used against SGST and any balance against IGST. CGST against CGST, any balance against IGST. IGST against IGST, then CGST, then SGST. CGST cannot be used against SGST. SGST cannot be used against CGST. Therefore, I will have to maintain separate accounts in my electronic credit ledger. Because the entire system is automated, online itself on the system, I will have an electronic credit ledger where separate balances will be maintained of CGST, SGST, and this will be the manner of utilization of the credit which I have.